Bloomberg Audio Studios.
Podcasts, radio, news.
President Macron, thank you for talking to Bloomberg. We're here at your annual Choose France conference for foreign investors. And as long as I've known you, you have always wanted to prepare France to like business more, but also business to like France more. And you look and you see what is happening here. You have had many successes. You are about to trumpet 15 billion euros of investment in France. But you also know France has problems. The economy is not growing that much. The economy since you came in has grown roughly half as fast as America. You still have a state that takes up 57% of GDP. And you have all that red tape, which your government says it wants to get rid of, but is around 3% of GDP. So how do you persuade people to choose France against that?
Thank you very much for being here in this Versailles Castle. And this is quite a good wrap-up you just made. We delivered a lot of reform. Since the very beginning, 2017, tax cuts, flat tax on capital gains. We decreased from 33.3 to 25% corporate taxes. We made a lot of reforms on labor law. And after COVID, during the past 2 years, with inflation, war in Ukraine, we passed reform on pension scheme and unemployment mechanisms. I don't see a lot of countries around us having done so.
But you don't just want to be compared to Europe, do you?
No. My point is just to say we delivered, we do deliver, and we will deliver. And this is why we will launch this week a new bunch of reform on labor market. We will launch a new bunch of simplification and an attractiveness package for finance. And we will prepare we have already launched new simplification, and we will prepare for September a new bunch of reform on labor market. So it's a permanent work. But I see where we come from and where we want to go. France was lagging behind, clearly in Europe, because of too much bureaucracy, a strong system, a lot of strengths, but lack of competitiveness. I see that we clearly bridge the gap with the others, and now we are front runners in Europe. My concern is not just France, is Europe in comparison with US and China. And this is the point you mentioned. During the three past decades, if you take the last 3 decades, we created half of the value per capita created by the US. Why? Lack of innovation, lack of investment. This is the main reason. This is why now my top priority is to have a European policy saying we have to be much more innovative. We have to create a much more efficient capital market. We have to invest much more from a common budget as Europeans and from the private sector. And we have to deliver in parallel our decarbonation, because I do believe that climate, digital, growth and job creation are the 3 pillars of what we have to deliver.
And those, we will go through all of those, but just on that point about the European economy, you had a full-scale attack on it at the Sorbonne, where you said it is sclerotic, it is being left behind. Do you think that, from the EU's point of view, that sclerotic economy is a bigger long-term challenge than, say, Vladimir Putin?
I think this is clearly linked to what's happening as well. But we have to completely reset our model. I think now France clearly is one of the leading economy. We are number 1 in attractiveness. We've been number 1 during the past 5 years. And if you take job creation, growth, we are 1 or 2nd in the Eurozone.
Do you think you're being held back? So this is my point.
We are here. Now when I take Europe and especially the EU as a whole, but it's true as well for UK, we have this issue in terms of business model. Why? Because we had low-cost energy thanks to Russia, production thanks to Central and Eastern European countries with quite low costs, a market for exports, China, and a geopolitical umbrella, US. These pillars are being completely revised. Totally.
Yes.
And it's no more valid. So we have to reinvent. What and how? By creating much more value on our own, by being much more innovative, by creating much more jobs and jobs with value, good jobs, I would say, on our continent. The key point is deliver much more innovation and productivity policy, public and private. So the second key reform is to accelerate decarbonization and especially our electricity policy, because through renewables and nuclear energy, we can deliver low carbon, sovereign, and low-cost energy, which is much more than importing gas and fossil fuels. Third, we need much more investment based on common budget, and in my view, based on public reports and figures, we need 1 trillion more in terms of budget, in terms of spending. And in parallel, we have to make the capital market union a reality, which is not yet the case.
Can I come on the capital market union? Because you have here an example. You have BNP.
Yeah.
Now probably Europe's and definitely the Eurozone's most successful bank, worth $80 billion. But you are entertaining these people like JP Morgan and so on. JP Morgan is worth $550 billion. It's 9 times as big. Bank of America, 4 times as big. And the reason why is BNP Paribas cannot expand throughout the European Union and take over other banks.
This is very true. We have several issues.
You would like to see BNP take over one of these, take over a German bank or an Italian one.
We do need a consolidation, but we do need as well an actual domestic market as Europeans, which is not the case. We have to deal with 27 regulations. Energy, finance, and telco are the key sectors where single market doesn't exist. It was a choice at the very beginning. I do agree that we have now to open this box and to deliver a single market approach. It's much more efficient. So our view is that now we want to elaborate a Franco-German consensus on capital market union to have a single system of resolution, a single supervision, and a much more integrated capital market union.
But would you be happy with, say, Spain's Santander coming and buying Societe Generale as part of that?
It's part of the market, but dealing as Europeans means that you need consolidation as Europeans.
So it could be cross-border mergers in both directions.
But this one is for banking union. It's already on track. Now we have to do it for capital market union, which is broader
more difficult.
and even more difficult, but we started to do so at a political level during the last council, and I do believe that we can find a Franco-German agreement. But why? I want you to just understand the challenge for us. 75% of our financing as Europeans go through banks and insurance. So we need much more consolidation, but we need a clear circulation of the savings all around the place. This is the first objective, to be much more efficient and to be sure that our savings will be invested in the right sectors and the right geographies. Second, every year, 300 billion savings goes to finance the US economy because we are not attractive. So in parallel with this capital market union and this simplification, having an actual single market, we clearly need the same level playing field as the US in terms of financing, which means when you take solvency and Basel, as long as it is not implemented by the US competitors, it should not be implemented by the European competitors. Otherwise, this is a killer for risk-taking, because these regulations just prevent you, our banks, from investing in equity, which is exactly what we need. And if you take the key driver of this difference between the US and Europe, the key driver is the fact that the US economy innovated and invested much more in equity and innovation than the European economy. I think we did much better during and post-COVID than what we did during the financial crisis. But now this is a totally new world. And we do need this new business model for the Europeans, more innovation, more investment, single market and capital market union, and a relevant trade policy. Because I want to add this point.
Can we come back?
None of the US and China are compliant with WTO today. We are the only one in the room to respect just the regulation of the WTO. And we are too naive. We are too open. Both of them protect their players and their economies. We have to do the same.
Can we come back to the issue of China later? But just on another French company, Total, you mentioned energy. Total's CEO has talked about moving its primary listing away from France towards New York. Would you be happy with that?
Not at all. And I would be very surprised. No, I wait for any confirmation. I understood it was remorse, so...
But it's interesting that it's tied to the idea that he would face extra ESG measures here that he would not face in America. And he thinks that would affect his valuation.
Do you mean that we are more serious than the US in terms of green economy and transition?
Yes, but you also, in your speech at the Sorbonne, you said, as I'll paraphrase, you said you cannot let decarbonisation and growth be enemies. And this would appear to be an example.
And this is my point.
Yeah.
But the point is just... we have to be sure when we regulate. We should not over-regulate.
Yes.
And I think now we have to deliver. We need in Europe much more investment. We have to cut red tapes, have more flexibility. But in parallel, everybody has to be serious. I saw a lot of funds, a lot of asset managers saying, we are with you on climate change. Where is the beef? Are you sure you are sufficiently compliant? Are you sure you are clearly addressing the same issues? This is my point. And this is why we need the resynchronization between the US and Europe. The resynchronization is, number one, the US regulation in terms of climate change should be more serious and realigned than the European ones. Second, the Europeans have to invest much more and be more serious and realign themselves on the US.
Can I just ask you about another French company? I've asked you about Total and BNP. LVMH, I looked, and nobody has done better under the Macron presidency than Bernard Arnault. His wealth has increased by 170 billion euros, and he is now the richest man in the world, probably the first Frenchman to have that honour since Napoleon. And I think we can both say bravo to Mr. Arnault. He's done it in a more peaceful way. But it's interesting. You look at the people who've, right at the very top of the wealthiest people in France, they're mostly either heirs or in fashion or both. And I wonder whether that is the kind of France you talked about creating. You always talk about technology, but the people who've done really well are these old-style businesses.
You're right, all of them. I don't think it's an old style of business, but it's a business where we have competitive advantage, luxury, fashion, and so on, because France is one of the great places. And Bernard Arnault consolidated this market very early. He was one of the front runners in this industry. And I think it is very good, and this is a chance for us, because first, we speak about a lot of jobs which are located in France, because a lot of these jobs are impossible to be relocated elsewhere. When you speak about alcohol, when you speak about cognac, armagnac, champagne, fashion, and making a lot of this stuff, it's added value. It's low qualified and very qualified jobs, and in parallel, he consolidated the market elsewhere, and thanks to the fact that he is listed in France, we consolidate a lot of value and value creation elsewhere. And this is why, thanks to Total, LVMH, BNP, and so on, we are the second largest place of the world to list your company.
But there is a tension, isn't there? If I look at all those people, or certainly Hermès, LVMH, Kering, all those ones, they have done spectacularly well by exporting to places like China. They've done very well out of globalization. And all the prescriptions you were just talking about in terms of Europe having higher trade walls, being tougher with China, you know what will happen in a couple of months' time? The Europeans will say, we want to put tariffs on electric vehicles. And what will happen is Mr. Xi, despite what he may have told you last week, he will come back and he will put tariffs on cognac. And that will help those very successful French business people.
Look, I think this is exactly the mistake we made 20 years ago on solar panels, and we killed our industry. I'm very simple. I don't lecture and blackmail anybody. I just look at the picture. When you have tariffs of 10 for Chinese electric vehicles entering into our market, and when you are taxed between 15 and 24 when you go to the Chinese market, you have an issue. And on all the different sectors, what we want is just reciprocity. We want, and in fact, more than that, more just than regarding the relation with China, level playing field. So what we ask for is exactly that. We want to be sure that in terms of tariffs, subsidies, rules of production, we have a fair competition. And I mentioned it very openly to President Xi. So it is not a geopolitical agenda. We don't want to blackmail and push back some of their production. We want to be sure it is fair. It's fair to launch precisely inquiries and look in details at the situation and revise it. If we are weak, if we are threatened by the fact that you can have retortion measures, you just don't do what you have to do. We had this discussion, and this is why they decided not to implement the first measures on cognac, but to withdraw the first one. So I think it's a normal approach, but look at the situation today. The European Union is the most open place of the world. But you cannot survive if at the same time you have subsidies and overcapacities in China and protection in some part of the market, and Inflation Reduction Act and Buy American Act in the US. It doesn't fly once again.
So Europe has got to get tougher now.
But this is a necessity, not because we are protectionists, but just because we want to protect our economy.
The Germans do not agree with you about this.
I think it depends whom in Germany and for which perspective. It's totally true that some German companies, when they are incorporated in China, for instance, benefiting from subsidies, not just German, European, American, their interest is probably to preserve that and to sell themselves their overcapacities in China to the rest of the world, and especially the European market. But the German economy's interest is totally aligned with the French economy's interest, meaning creating jobs, creating value, but just protecting your business and your people when they are attacked by unfair measures. And it's normal. It's part of the business. So for me, it's just a no-brainer.
It's a very interesting journey watching you make the French love business more and business love France more. Thank you very much
for
talking to Bloomberg.
It's very important. Thank you for being here. I hope you will have the opportunity to discuss with a lot of CEOs, and we will continue because business is in permanent evolution given the fact that geopolitics is moving all the time.
They're very different things.
Thank you. Thank you, James.